I had a lot of questions. You guys had a lot of questions. I saw these questions come through in the Market Pulse survey. So thank you all for filling that out and putting in your additional notes on things you want to find out about. I had a lot of those questions. I started asking Ingrid some of those questions. I said, hop on Facebook Live. Let me ask these to you. So I'm going to go rapid fire. Ingrid, thank you so much for being here. First question I always start out with is current interest rates. What's going on with them today?
It's always the hot topic. So rates have calmed down a little bit. A few weeks ago, we were seeing them go up and down constantly, one way or the other. They've been a little bit calmer over the last 2 weeks. We still have places where there are products that are priced in the market, products that are priced out of the market, but rates have calmed down a bit, and it's a lot easier for the customers.
Okay, so what was happening when they were going up and down so crazy within like 1 day period? That is happening.
It had to do with the mortgage-backed securities. There was no one buying them, and the Fed would come in and buy some mortgage-backed securities, and then the rates would go up and down based on that. But they've calmed down a little bit, and we're able to see the lower rates start to come back, and customers are in a better place at this point.
Okay, so this big news with JP Morgan Chase that we've all been talking about. Why did they do that?
So JP Morgan Chase came in and they said, we're only going to buy loans that are 700 credit score or higher, and we're going to require 6 months reserves on every loan. And the reason that they did this is the concern in the market for liquidity. There is a large amount of customers who are taking the 3-month mortgage relief. So lenders have to be prepared. They still have to make the tax, the insurance, principal and interest payments, so they're prepared for that. There's also, with unemployment numbers going up, there are people in every lender's office recalculating the numbers as the unemployment numbers go up on how many people are going to go into foreclosure. And they have to prepare for that. So all the banks are trying to hold on to their liquidity. And JP Morgan Chase said, if we have to do this, we're going to pull back on our guidelines so that we can save our liquidity and minimize our risk over the next several months. Now, Fannie stepped in and said, wait, you can't do that, because if you do it, all the other lenders are going to follow.
Yeah,
so
they're the biggest.
Working with them.
Okay, so it was kind of like hey, you guys didn't really take into account all the things that are going to happen to us at JP Morgan Chase with this new forbearance and all these things you're putting out there. So because of that, we have to make this move. Now the ball is back in Fannie and Freddie's court.
Absolutely. And they're working with them. So it's not a big as a concern as when it first came out that other lenders will follow. We'll see what happens over the next couple of weeks, but we're in a better place than we were when the announcement was first made.
That makes sense. And it doesn't sound like we don't have a crystal ball, but this doesn't seem like we're going to deal with this for years with this lack of the jumbo product.
Correct.
Okay, cool. So what are the updates on jumbo loans just overall?
So we've had some more jumbo lenders pull back on their guidelines. It's hard to do investment properties, hard to do cash out refis. We do still have jumbo lenders in the market. You just have to verify. I had a realtor call me on Saturday and said, you ran a jumbo loan pre-approval for me. Is it still valid? And I pulled up the pre-approval and said, absolutely, we can still do that. The rate is still good. You're solid on being able to write an offer this week for that customer. So you just need to go back and check if you have a pre-approval on a jumbo loan with your lender to make sure that it's still valid.
Okay. So I saw like a news headline of appraisals are now being accepted 120 days post-closing. I
saw that also. That doesn't apply for residential mortgages. We still have to have the appraisal prior to closing. But that was something that came out just recently.
Okay, so not real news we need to adjust to. What about VA appraisals, or maybe even other appraisals with the desktop or exterior appraisals? How widely accepted is that? Is that the new norm?
So we're getting guideline updates are happening every day. So we just got the VA guidelines that you're speaking about. Fannie and Freddie had come out last week with some guidelines. And what they're basically saying is we would like the appraiser to do the appraisal. If they can get in, great. That's what our ultimate goal is, for them to go in, do the normal appraisal, take pictures of the property, and provide us the appraisal that we normally get. However, based on the current environment, if they can't get into the property, if their seller's not willing to let someone into their property, there are options such as a drive-by, a desk appraisal. There's different things that they can do, alternatives, so that we're not slowing down the process. We can still get that deal closed.
So if we have sellers that don't want anybody in their property, even the appraiser, as a listing agent, is there good suggested language we should reach out to the buyer's agent for?
Ideally, then we need to go back and check the guidelines on that loan and make sure that there's alternatives. I was talking with an agent within your company who said, what if I go meet the appraiser and let them in and my sellers cannot be there when it happens? And absolutely, that can happen too. So
Okay.
we can work with the appraiser, and the appraiser knows these guidelines and can work with the seller and your agents.
Okay. We are seeing a lot of buyers, or we're representing the sellers on the listing side. Buyers are changing their lenders after they're under contract, like more than ever. What is going on with this? I don't think that we have any recourse as a listing agent on that. Why is this are you seeing this?
So there's lender-specific language in the contract that has to do with the terms of the mortgage, whether it's 10% down, whether it's conventional or FHA. And as long as you meet those, then you're perfectly fine. If the loan didn't go to closing and it's 15% down instead of 10, no one's going to say anything. If I provide a denial letter and it doesn't match the terms of the contract, that denial letter is no good. But what you're seeing now is that there was a lender who couldn't lock loans for 2 days a week ago. So if someone with a contract went to that lender and they're unable to tell them when they can start locking loans, they had to switch lenders. So there are times in the market that either a product or a lender doesn't work anymore and you're having to switch your lender, and it is not a problem with the contract.
It just sounds like a sign of the times. And as listing agents, we don't really have recourse as long as they're meeting the contract, I guess. All right, so what about verification of employment and job losses?
So
What do we need to know about that?
The job losses, again, today went up quite a bit. So we're having, on a normal process, we verify employment 3 to 5 days to closing. So we just re-verify it. It's basically just calling them up and saying, does Justin still work there? Okay, thank you. So we want to make sure that they're still employed. So right now that can happen even the day of closing. If there's somebody in a risky industry like the airline industry, and we see news of that, we do have the authority to go back and verify that employment the day of closing. We want to make sure they're still employed at the time of closing.
Yikes. So what should we say to our customers when we represent the buyers to prep them for pre-approval, for locking the rate in this environment?
So I would say, hey, you're going to get pre-approved. Stay in touch with your lender. Your lender should be staying in touch with you. If rates are moving and you're close to writing a contract, let them know. If something changes, if your job changes, be sure and reach out to the lender and talk to them. They can work with you through that process. If anything, the lender should be reaching out if the product changes. I've pre-approved someone on a bond loan and we can't close that loan right now, then I need to be letting people know. So it's a matter of everybody keeping in touch over the next couple months.
Okay. What about minimum requirements for reserves and credit scores? It seems like they're going up. What are they going up to?
So the riskier loans we used to be able to do an FHA loan at a 580 on an exception. FHA loans have gone up to 640. So it's really, though the riskier loan guidelines have come up. Some lenders have said we'd like to have 2 months of reserves. That 2 months can be a retirement account. They just don't want to see a customer going to closing with zero right now, zero cash after closing. They want to make sure that if that person loses their job tomorrow, that there's money to make the monthly payment.
Okay. What about the first-time homebuyer programs, like the bond and FHA stuff? So
last week, VHDA sat down with lenders and said, hey, if the loan that you give us, they take the 3-month forbearance offered by the government where they don't have to make their monthly payment for 3 months, we're not going to buy that loan from you. You're going to have to buy it back. So lenders got nervous and they said, don't do any VHDA loans. VHDA has come back this week and said, okay, ignore that. We're going to take your loans and we're back doing VHDA loans. We're getting guidance on DC Open Doors and Maryland MMP. So if you have a bond approval, just check in with your lender. Everything should be back to normal very shortly.
That's good. It almost seems like this mortgage forbearance thing gave most people who held a mortgage a little bit of relief, especially those that were losing jobs and stuff, to say, oh, thank goodness. But then it freaked out every mortgage lender in the world because they're
scrambling.
Yes, there's so many other things that took place. So like they calmed us down as the consumers for 2 days, and now all these changes start happening. And we're like, wait, the whole world is crumbling because of this stuff. But it sounds like they're starting to get all these things back in
We're
line. So
starting
that's
to
good
get
to
it
hear.
worked out. The day that the announcement was made, I started getting calls.
I'm sure.
I said, okay, you need to give us a little time because this is unprecedented. This isn't something that's been given before. It takes lenders time to set up their websites, their processes, their flow of how to do that. So it's the lenders sort of catching up with what happened.
Okay, last question. What's going on with cash out refis and investment properties? Anything?
So those are riskier loans. So right now, those are not loans that are being done. And if they are being done, the rate is so high that the customer doesn't want it.
Okay. Hopefully that changes in the future, but we'll all be in a better place when that does happen. Thank you, Ingrid, so much. I'm going to ask that you monitor this post throughout the day because I didn't give anybody a heads up that we were going to do this at this time. So we might have some follow-up questions.
I'd be happy
I'm going to also post the table of contents in the order of questions that I went over. But thank you so much. You're the best, Ingrid. I just got all those questions answered. Great resource. We'll talk to you soon.
Thank you.